Good morning, everyone. I, just like Michael, spent this morning many people in my ear saying that this is a hot topic. So I'm not going to spend too much time on myself. I want to sort of dive right in and get into what I think everyone's waiting for. So I think crowdfunding and crowdsourcing this morning through all of the discussions has been referenced about 100 times. And I know we have a very broad audience. So what I'd like to do is maybe ask David, not only for all the panelists, I want them to introduce themselves and also address the first question so it moves along a little faster as well. So I'm going to hand it over to David. And David, if you could just spend some time giving us an idea of what is crowdfunding.
Thank you. Crowdfunding is any time you have a lot of people that were using the internet in this case to invest or putting money towards a particular project or an enterprise or an endeavor that somebody wants to do. That can cover anything from philanthropic to, donation, which we've seen so rapidly take off and reward-based through Indiegogo and Kickstarter and some others, to what we're talking about here this morning of equity-based, where you're giving stock, or you're giving something back, some security back or a debt for people coming on and giving money to your company or investing, to more sophisticated, all kinds of variations on that, from some Reg D crowdfunding or 506 crowdfunding to some other versions. But fundamentally, it's just that. It's really that simple. It's people coming on, going out. It's the power of the masses in generally smaller amounts. That is the underbelly of it all.
Great.
Can you introduce yourself? Oh, I'm sorry. Yes. I'm David Marlett, the Executive Director of the National Crowdfunding Association.
Perfect. Thank you very much. So we're here to make sure that platforms and the efforts that have been made since as early as 2003, that crowdfunding is, and the regulations around it and the legislation and the avenues for people to raise money are there and controlled. Many of the panelists today are pioneers in technology and platforms. Maybe I'll lean towards maybe Slava to sort of start off and give a little background and also talk about your platform, your efforts, and the education that you're providing entrepreneurs on your platform.
Sure. So I'll try to give like a little bit of context. My name is Slava Rubin. I'm CEO, founder of Indiegogo. And some of you might have heard of it, others not. Some people think we're already a success. But it's interesting. There's a phrase which is you get overnight success in approximately 20 years. So let me just set up that context here. Indiegogo didn't launch yesterday. We came up with the idea in 2006. So think about 2006. Most of you are old enough to remember 2006, which is you have Twitter is nascent. You have YouTube not owned by Google. Facebook is smaller than MySpace. Obama is not a word, maybe in DC. And raising money on the internet is just really bad. Essentially, there's gatekeepers, any channel where you want to get money. There's the guy at the bank who decides if you get the loan, the person at the credit card company decides if you get higher access, the person at the government organization to say, do you have a good enough application? And everywhere there's gatekeepers. But at the time, internet is democratizing everything, so why is it that funding isn't being democratized? So my two co-founders and I, sorry, I talk fast. My two co-founders and I get together and say, hey, why not try to democratize fundraising and eliminate the gatekeepers? I mean, this is already happening for eBay and other things. So we launched in January 2008. Fast forward, we now distribute millions of dollars every week globally, virtually every country around the world. We allow anybody to raise money for absolutely anything. I would say that we actually have had the greatest entrepreneurs ever on Indiegogo. And what I mean by that is we actually had the first ever crowdfunded baby, meaning a couple was not able to have in vitro fertilization funded, and they were able to go to the crowd and get it funded. So I'm getting at that's pretty good entrepreneurial activity happening. We've also had plenty of businesses, companies that were turned down by VCs, turned down by banks. They get funded on Indiegogo, and now they're getting funded by VCs, and now banks are coming to them asking them to be their clients. But in terms of the equity crowdfunding piece, which it obviously isn't live yet. I mean, the law has passed, but it's not live yet. We're very much involved. We talk to the SEC and the folks in DC regularly. We actually were really proud to be the only crowdfunding platform actually at the White House at the signing of the bill. And really, what made us so happy is we had 3 of our case studies, 3 campaigns that actually raised money. And one of those campaigns was actually called the crowdfunding campaign to change the crowdfunding law, which happened to happen 2 years before this all went down. And actually, one of the case studies was on stage with President Obama. So I'll leave it at that. And we're just very active in the whole crowdfunding space. We plan on being here 100 years from now. We think this is probably about top of the 2nd inning of a very long process, and it's really exciting.
Thanks. Will?
Sure. So my name is Will Schroter. I'm the co-founder and CEO of Fundable. We're a crowdfunding platform specifically targeted towards small business. We help people raise through both rewards and equity. I've been an entrepreneur all my life for almost 20 years. I started one of the first web design companies called Blue Diesel out of my dorm room, merged into a small agency. We grew that to about 700 million, sold it. Now that company does about $2 billion. Thereafter, I started an incubator called Virtucon Ventures to incubate my own ideas because I actually hated working with clients. And through that process, we've launched 7 companies. The last 3 have been venture funded by over a dozen Silicon Valley VCs. I spent an ungodly amount of time building companies, going through the startup process, and unfortunately, financing companies. When we looked at crowdfunding as a way to change this paradigm, to give more people more access to capital, I jumped out of my skin. This is something so important to me as an entrepreneur, and seeing the other entrepreneurs at this event, talking in the hallways, et cetera, I know it's important to a lot of other people. The world isn't funded by angels and VCs. The world's funded by the people in this room that just write checks to the average person. If you drive down Main Street and you look at all the businesses that are funded, they're not businesses thinking about follow-on rounds. They're thinking about, I need $25,000 to kind of get out the door. That's a really important part of our mission, getting people idea stage capital at the early points in their careers. And as an entrepreneur, that's really important to me.
My turn. Vince Molinari, I'm co-founder and CEO of Gate Technologies. Wow, there's so much here. I think it's really important just to take a step back for a second, and we hear about the Jobs Act. And people like Karen Kerrigan and Steve Case, the awesome work that they did behind the scenes when you hear over 400 bipartisan lawmakers coming together to vote this into law, or to vote into place and have the president sign into law, is a tremendous accomplishment, probably the biggest securities laws changes that we're seeing certainly since the 33 and 34 Act. So thank you for all that heavy work behind the scenes that hopefully we're all going to get a bit of benefit from. From our standpoint as Gate Technologies and Gate Global Impact, we really believe this is the beginning of the democratization of capital formation. And crowdfunding is what I say is the first iteration, the beginnings of that at one end of the continuum, where we're able to take for the first time, when it does come into law, social media, the power of Web 3.0, and marry it to the ability to distribute securities, to broaden the base of distribution to access to capital. And a lot of that we were attracted to as from Gates' standpoint. When we set up in 2009, it was really to try to reinvent or repair the broken capital formation system in this country. And we could talk about the IPO system, the decimalization, Sarbanes-Oxley, order handling rules, all those things. It didn't really matter to us. The fact was we had to move capital back to the entrepreneur, to the small business, to create jobs, to have economic recovery and growth, which creates sustainability. And when we can take that into a venue like the impact investing sector and start to measure and deliver good alongside that, that's the future. When we can take financial related investments and deliver good at the same time. So again, we heard about it earlier today. The mindset of how we're investing is changing. And I think we have to adapt to it. I think technology and crowdfunding itself gives us that first paradigm to be able to match opportunity to capital to make a difference.
I'm Andrew Sherman from Jones Day. I think I'm here because I'm working with that family that Slava mentioned on the baby. We're doing a Series A convertible preferred stock offering in terms of the follow-on round for the baby. So we'll see how that works out. Yeah. I'm here wearing 2 hats. One is obviously as a partner at Jones Day, a corporate securities attorney, looking at the legislation, and as Karen mentioned, after all of her hard work, the devil's in the details. What will these new rules look like? How will they be implemented? How will they affect my clients and our firm's clients' ability to raise capital in what has clearly been a very volatile market? Anything that Congress or any of you in this room can do to make access to capital easier and more efficient and less costly, you'll certainly get my vote in favor of. The second hat is as an academic. I've been teaching at the Smith School of Business at Maryland for 24 years in the MBA and EMBA course programs, courses on capital formation and business planning, as well as the last 3 years at Georgetown Law School, teaching young law students about issues involving entrepreneurship. And from a legal perspective and from a policy and educational perspective, this is the same new world that was described by my co-panelists, the impact of Web 3.0 and transparency on the capital markets, the fundamental notion of what is an informed investor. Karen's right, these laws were passed in the 1930s, but the fundamental concept of an informed investor has not changed. And what needs to change with it is how the law catches up with the technology and the trends that are available today. So that's what I'm hoping we can, knowing that some of you are interested in education, and how do we now reteach this topic in light of these developments is what I hope we'll be focused on.
Perfect, thank you everyone. Angela, let's just take it right back to you with the next question. We've seen great strides over the last several years with the current platforms and the current offerings. Let's just sort of focus on a year, 2 years from now, assuming the legislation goes through in 2013. What do we need to do? What do you need to do in order to make this, the crowdfunding arena support itself and grow and continue to grow?
There's a couple of pieces, and I as all of us said, we could probably go till about 2 o'clock, which I think Michael just approved an extension of the panel till 2, is that right? Right, I don't want to make him upset. The first issue is this policy issue. What does the concept of an informed investor mean in light of these new levels of transparency? Is Web 3.0, as was implied, the ultimate democratization of the capital markets such that old-fashioned rules like the anti-solicitation rules and other things that were part of Reg D really aren't relevant in today's discussion? One of the concepts in Reg D, just as an example, was this pre-existing relationship. Well, that was a good term back in the 70s and 80s. Now, with LinkedIn and Facebook and all of these, inner networks that we've created, does that concept even still apply? What can we put in place at the SEC level that will prevent those who dissented against the Jobs Act in terms of turning things into the wild, wild west and preventing fraud? Those are the mechanical things that will need to be taught. The policy issues are issues around this issue of transparency and democratization, and the many areas of the law have struggled to keep up with the pace of technology. And speaking as a GU law professor or adjunct professor, how do we as professors teach young lawyers in the future what the law might look like 3 and 5 years from now as technology pushes these changes forward? And the same thing's happening in intellectual property, the whole Napster case, and what does copyright law mean? I mean, you could almost pull this topic out, insert IP law, and have the same dialogue about democratization and the impact of Web 3.0.
Maybe, Will, you could take this question. With the expected growth of the industry and sort of the naysayers in the space are saying the compliance matters or sort of waiting on the regulation to come through is a big component of growth as well. So maybe you could speak about what you're doing within your organization to sort of educate the entrepreneur and also the investor.
Well, right now, I don't know that the biggest issue at scale, and I'll emphasize at scale, is going to be fraud. As Slava, you can probably agree, it's hard to raise money online, even if you're fully legitimate, right? So I'm sure there's going to be somebody that's going to have a fraudulent case and that's going to come out. But at scale, the issue is failure. Startups fail, and they mostly fail. And the public needs to understand that startups are not an easy investment that's highly liquid, et cetera. If everything goes extremely well, maybe in 7 years you'll see your money back. Or maybe you'll be at the bottom of the cap table and a bunch of rights that you'll never see your money. Getting the public to understand how investing in startups work is the hard part. Like, that's actually our biggest challenge overall. On the other hand, with an entire industry that's working on this at the same time, this is probably one of the greatest opportunities we've ever had to educate everyone on how startups work, both on the entrepreneurial side as well as the investor side. So a lot of what we've been spending time working on are processes that educate the investor to say, look, you'll probably lose your money, right? And not just in a hidden disclosure. Say, look, you really need to understand how startups work. You need to understand how entrepreneurs work. I've met thousands of entrepreneurs. They're not bad people, but most of them fail. And people are going to lose their money in crowdfunding, just like they've been doing for generations in funding small businesses. I think if people understand that it's not necessarily crowdfunding at play, it's the function of businesses that are going to fail.
How many of you bought something online in 1995 or 1996, so eBay, Amazon? All right. How many bought something online this year? Well, that's basically the trajectory of crowdfunding. But see, everybody thinks that they're going to be better at it today. So all the people that didn't want to raise their hand before to buy something, see, you're all going to fail. What I mean by that, not you specifically, because you didn't buy something in 1995, but it's just everybody thinks that it's going to be day trading, right? It's the same exact concept. Everybody plans to win the lottery because there's this new buckets of gold on the other side of the rainbow, which really brings it up well. There's plenty of failure that's going to happen. And when it opens up, there'll be a little bit of fraud. You know, there'll be some fraud that happens, will be on the cover of the New York Times, like, oh, this is the end of the industry. Not at all. The number one thing, in my opinion, that could happen is exactly what happened with the government and the commerce industry in the mid-90s. See, the same exact process could have happened, which is the government and all the different people who were stakeholders were saying, you know, grandma's going to have her money stolen from the commerce company. They're not going to deliver the goods. It's going to be a broken TV. They're not going to get their bike. And everybody was saying, hey, we got to start regulating the crap out of this. But you know what they did? They said, okay, you guys have like 2 years to prove that we shouldn't come in and regulate this out of control. And then Jeff Bezos and some other people said, okay, cool, let's take this on. And they figured it out. You know why they figured it out? Because they wanted to make a mint, right? They wanted to make lots and lots of money and create profitable companies. So you don't need to tell me, somebody who's been running a crowdfunding platform for years, that I need to worry about fraud. You don't need to tell me that I need to worry about you being unhappy customers. You don't need to tell me that, you know, the actual campaign might result in a negative product, which means there's going to be people upset and there's going to be bad PR. The reason I need to worry about that is because I want to have a good business, not because DC needs to look out for me. Does that make sense? So fast forward 2 years, you're going to have everybody and their mother trying to jump in, both from the campaign side, from the platform side, from the funder side, and there's going to be some broken eggs along the way. God bless us. I hope the government stays out of the way, and they won't, right? And that will be the problem. And when it become onerous issues getting in the way of good platforms trying to solve things, then you get an industry that will get decimated, and it'll never be able to move forward. So, in case you want my opinion.
Can I just
Good,
touch on
Vince,
that? I think a very important component, and Slava just touched on this, this is not a trading market. You know, part of what I think is broken about our system currently is it's become a trading market. We've commoditized our marketplaces so much, and not beating up on the high-frequency trading or any of the things that are going on, but we lost contact with the fact that there's cause and effect. There's a cause of capital going into a company that has an effect of expansion and job creation. So part of crowdfunding and part of these new investment practices are moving back to being an investor, having some patience, believing in the paradigm of what you're investing in, and not looking to the exit before settlement date. So I think that's very important in the education process, as Slava touched on, and I fully agree with Will's assessment. There's a world of difference between business failure and fraud. And the inherent risks associated with startups and small businesses have to be highlighted so that the investor protections are put in place, because we're now meeting this paradigm shift where Web 3.0 is meeting regulation. It is a lot different than the consumerization of the web, where you don't have this thing called the SEC and FINRA in the middle. So it's a learning curve for everybody, and we have to get it right.
Andrew. And I agree with the distinction. I don't think you can let the risk of fraud be a reason. There will always be a risk of fraud in almost anything we do, including whether the taxi cab driver takes me directly back to my office when I leave this conference. The issue, and I applaud Michael for putting this panel together, is about education. And it's not just education of the investor. It's education of entrepreneurs who are about to receive 200, 300, 400 new shareholders. You know, what does that mean in terms of governance? What does that mean in terms of, you know, their cap table? What does it mean in terms of their future ability to raise capital, and how will that be impacted? So I think that a good solution, which is I think what Slava is hinting at, is self-regulation, industry leaders like the people on this panel saying, hey, we got this, you know, like Bezos reacted to. And is there, or are there educational models that can be put in place, not only in the classroom, but on the platforms themselves, and anyone else, including many of you in this room, that interact with entrepreneurs on a regular basis, so that all I've ever been concerned about is that when a securities-driven crowdfunding offering is made, that everybody at the party is an educated consumer, that both the investor and the offeror are aware of the implications of this model.
On that note, how do you think currently anyone can raise money? I think Slava said everybody up and down the economic chart can sort of jump on a platform and sort of put their product up there. There's an approval process. Do you think there's a need for criteria prior to the equity-based funding coming through? Should there be a checklist by the platforms?
Just
maybe
to clarify, there's no approval process on Indiegogo. It's completely wide open.
Some of the other platforms do have criteria to a certain degree, broadly. So I don't mean to cut you off, but
no, there's two questions built in there. Question one is, and the SEC is looking at this as well, what should the rules of the platform be in terms of making sure that there's fairness? I mean, should, you know, Will's offering be higher up and bigger as I arrive at the site looking for an investment? If I pay more, how do we make sure the networks are objective? And I completely agree with Slava. I think that the industry and through the association will figure that out without it needing to be over-regulated. The educational piece in terms of the offeror, you know, the entrepreneur up until today has been, you know, raising capital for the company, not in exchange for the issuance of stock, either based on philanthropy or interest or some other affinity that that person writing a check or paying money on PayPal or whatever the methodology might be, feels towards that artist, musician, playwright, entrepreneur, small local business owner. We're now taking it up a level and saying, now there's an issuance of securities. That's a fiduciary duty. That's a steward-like relationship. How do we make sure that they're aware of the distinction? And that's going to be a combination of what the SEC comes back with and what all of us in this room can do to ensure that the process is informed.
So maybe I'll just jump to David. David, what's in the future for you and your organization?
Well, we are very future-focused, and one of the things that, and we cover both equity and donation crowdfunding, and I think we're going to see a lot of combinations where there's some, you know, we're already seeing some really interesting uses of using donation or reward-based sort of as a pre-vet before vetting of a project before you move into an equity form. I think it's really what's fascinating, certainly from my perspective, is seeing all the innovation and the ideas that are coming forward, from crowdfunding being sort of the future of the timeshare for real estate projects to certainly what's going on in the film industry, which is what I come out of, to so many other ways of doing combination effects using all the way from Reg D to the donation side. We're working with a large part of what our task is education. We started off really working in the regulation space as an association. There's another group called CIFR, which is doing a fantastic job. We have a very strong regulatory committee. But we've quickly moved on to where most of our members are small businesses and investors and people that are here, talk about a Jobs Act, to service the crowdfunding industry. I've talked to many of you in the room that have either software companies or various things that can get in and really help a lot of these entrepreneurs. A large part of what we do now is also with education, and we do the programs for SCORE, and we do the programs for and we're starting a whole program for veterans and how to get them into crowdfunding. And so a large part for us is just to get Americans to know what the word crowdfunding means, to get out there and experience it and to get involved. And we encourage people to not wait till mid-2013 when the equity starts, to look for ways within your small business now that you might be able to participate and reward, stick your toe in the water, get out there and participate in some of these things. To me, I think we've got some fantastic people. I'm an attorney. I've come out of the regulatory. Like I say, we first started, we thought, oh, well, we need to get in and really focus with the SEC. We do, and that's very important. But there's some fantastic people on it. It's kind of like, okay, they got that covered. What we really need to be focusing on is education, the population, and getting people out there and getting comfortable with crowdfunding. I think that's going to help a lot of some of the other problems, the more the populace is just comfortable with the idea.
Sorry.
Phil, can we talk a little bit about how this will benefit the entrepreneurs too? Because if we're talking about education, I think that's a critical piece.
You took the words out of my mouth, I'm sorry.
One of the things that's happening through crowdfunding is the transparency of how funds are raised and how businesses are presented. For the first time, we can see in real time the performance and presentation of an entrepreneur and the support that that entrepreneur gets. We can see something kind of hit the cloud where all of a sudden everyone's backing a certain project and everyone's got the fervor behind that. I think a few things will happen. Entrepreneurs for the first time will be able to see the format for doing a good presentation, how to present themselves well. I've seen literally thousands of business plans. I've seen very few good business plans and or pitch decks, which would imply that the level of preparation and understanding and calibration amongst entrepreneurs and how to talk to investors and how to raise money is terrible. And I think a lot of that's going to change directly from crowdfunding efforts. By way of that, it's also going to become more and more hyper-competitive, which will mean the entrepreneurs themselves will have to work that much harder to be prepared. Along with those crappy business plans, I've seen terrible ideas, terribly presented, that should never be funded, right? I think if these entrepreneurs had to go head-to-head with people that had their stuff together, kind of like you need to do in Silicon Valley amongst the VCs, you're going to see a better quality entrepreneur come out and better funding opportunities. So I think a lot of this, just bringing entrepreneurs in practice, is going to have a huge effect on everything that we all care about here in the room.
To piggyback right off of that, I think a business plan, as most people know it, is a 1985 concept. It's practically useless today. I think that, don't get me wrong, having like a 1-page or like 3 paragraphs to explain what you have in mind is somewhat helpful, but see, it's actually so cheap and so easy these days to actually prove traction that if you can't do that, you know, you are in the outside saying, oh, please help me. Somebody else is the reason I'm not able to do this. It's just so available now through crowdfunding, through so many sources that, you know, a crowdfunding campaign is your business plan, is your traction, is your data, is your customers, is your marketing, is your vetting, is your R&D, all in a 30-day campaign. And while the other person's on their 19th page writing I think the model says I should have this variable go up a little bit higher, you know, the other person's like printing customers. So it's just like, it's moving really fast. The speed of change is only going to move faster. And I hate to say it this way, but the amount of people that are like quite young in this room is actually quite low. The people that are like under 30 right now and are under 25, they're destroying it. Like, I don't actually know, I'm actually nervous that the laws will not allow them to move forward fast enough. And as Steve K said, you know, like the globe will move around us and lap us because we're busy protecting our investors.
One more thing before we get to questions. I'm sorry. Slava, to you. How long does it take generally for an entrepreneur to take those 2 or 3 paragraphs, sign up to your platform, and have the campaign running?
I mean, signing up, you guys can sign up a campaign in the next, 45 seconds. It's all a matter of how much effort you want to put into the campaign. The campaigns that do the best and look the easiest are the ones that probably spent the most time in advance planning and thinking about it. So in terms of some interesting metrics, just really high level, that's not why you're here, but a campaign with a campaign video will raise 114% more money than without a video. If you do an update every 5 days or less, you'll raise 4 times more money than if you do an update every 20 days or more. If you have 4 more people on your team, you'll raise 70% more money. I mean, these are just like little...
Are these statistics available to the entrepreneur along the way?
Yeah, it's all in our blog, it's all in our insights. I mean, in terms of the entrepreneur, some of the benefits, I will go so far as to say that the money is the least valuable thing that you get in a crowdfunding campaign. Number 1, you get to gauge demand and mitigate risk. Like literally, we have investors, VCs, coming onto our site looking for who's doing well so they can fund them. Why? Because there's the whole, oh, come back when you have traction. There's no come back. It's right there. It's traction. Number 2, you get to figure out your marketing. Is it old men or young boys that like it? You don't need to write in your business plan what you think the data shows. Just prove it. You have customers. Number 3, you get more marketing exposure than you ever could on your own. I mean, we're getting millions of pages every day. We're in top media literally every single day. If you look at all the crowdfunding platforms, you're like constantly reading something about crowdfunding. Why? Because it's people want to write about these human interest stories. And probably the most valuable is you get the data. Every industry is trying to disintermediate you between you and the end customer. iTunes, Amazon, they all want to be the middle point. Here, it's just between you and the relationship. It's the most powerful thing ever in business.
Great, thank you. All right, I'm going to open it up to questions from the audience. Thanks. Right here, right in front. You just stand and introduce yourself would be great. Thanks.
Shelley Porgas. I'm the director of the Global Entrepreneurship Program at the U.S. State Department. Thanks, Michael, for the panel. Thank you all for your great insights. Really, really insightful. Key question that's triggered off of what you just said, Slava, which is how this campaign will do all these things for you. But speaking about target markets, because it's so early stage yet, and because we know that early adopters will be there, whether it's the young guys or whomever those early adopters may be, is it really a true test of your target market if you're on there? In other words, if I'm targeting, middle-aged women who are, with a great product that there may be great demand for, but they are not yet on Indiegogo, is it actually a real test of target markets?
So that's like a really good question. Why is it a really good question? Because you're pushing right there a myth number one in all of crowdfunding. Okay, very clearly, there are no elves anywhere. What I mean by that is there is no site anywhere in the world where you post your idea and elves come from out of the woods in the middle of the night and they just start funding it. You wake up and it's just this bucket of gold that's full and you're like, I love Indiegogo, it's so awesome. I just want to be really clear, it doesn't exist anywhere in the world. So what you have to do is you are the one that does all the work up front to find your target market. And yes, you do all the work. You do no work, you get no return. I don't know if that could be any more clear, right? So then why be on a site? Why be on Indiegogo? Because yes, we have tons of people from all kinds of communities, all kinds of target markets, and you want to believe, and we have statistical data to prove this, that once you get your ball rolling, you can get exposed to many more people. And yes, we have every demographic possible on our site because it's a cross-pollination. And the beauty of our site, it's a little bit of a sell, is we have what's called the go-go factor, which is exactly like Google. We've created the SEO of crowdfunding. There are no opinions on Indiegogo. No one chooses that your campaign is good. If someone chose, you're just perpetuating what happened yesterday. Most sites do that. Why do they do that? Because it's easy. It's actually very hard to become the Google of crowdfunding. So we created the go-go factor, where every single person here has equal opportunity to be on the homepage, in the media, in the press, etc. And that's all based on you doing work and raising your go-go factor with your community.
Yeah, hi, I'm Raj Lahoti. I'm CEO of DMV.org. And first of all, thank you guys. This whole crowdfunding concept has been introduced to me recently, and seems like there's just a lot of buzz around it, obviously, with the timing with the Jobs Act. Will, you were mentioning earlier that crowdfunding is an easy platform to, well, lose money. There's a good chance you're going to lose money. It's not a, well, you guys were saying that's not really a trading platform, and might take you 7, 10 years, whatever, to recover that money, if you're lucky. So already starting off with some odds against you. My question is, who would be the typical crowdfunder? Okay, so earlier we had an example where, if women, for example, investing in our product, that could be like we can invite friends, family, and their networks, right, through social media and Facebook and all that, and get them to come onto the platform. So we use the platform as a tool, but basically we kind of do that initial getting the ball rolling and all that. But my question really is, why do I want to tell them, hey, be a crowdfunder? Is it because, hey, you're giving back to the entrepreneurial community and you might make some money in 10 years? Is it an alternative to investing in, I don't know, in the stock market? Or what exactly is it so that the person who's crowdfunding is like, yeah, I want to do this, I want to get into this, I want to put money into this space?
Can I answer that?
Yes, he was directing towards you. Yeah.
Okay, well, even better.
I want to jump in and help you out.
So I think the key distinction is there's two types of backers, investors. One is an actual investor looking for a specific return on their investment, otherwise going to put their money in the stock market. The other is what I just call a supporter. Supporter likes you, likes the idea, would love to get their money back, but that's not why they wrote the check. I think most of American businesses are supported by supporters. There are people in your family, friends and family, early customers, et cetera, that just want you to succeed. I think crowdfunding will create a catalyst for more of that activity, but I think that's where you're going to see the groundswell of most of this activity, which is actually to suggest that all we're going to do is take money that's already changing hands now and make it more efficient.
Just to clarify what Will said, and tell me if I clarified it wrong, this is not about crowdfunding will lead to some of the things that you said. All investing in early stage enterprises, whether via technology or from your Aunt Harriet, runs the risk of a slow payback period, the chance of failure. That's not a crowdfunding specific phenomenon. Crowdfunding is recognizing all of the trends that were mentioned by this panel at the opening, the democratization, the transparency, the interconnectivity that we all have. But just to be clear, the risks of investing in early stage enterprises have been around since the beginning of time. And that's all Will was articulating, not crowdfunding specific, that somehow crowdfunding raises the risk. The only issue on the table is, can we create, to Slava's point, an environment that's not overregulated, but make sure that crowdfunding certainly doesn't make that, albeit already embedded risk in early stage enterprise investing, any worse, and maybe it can even make it better.
I think there's a question. Yeah.
Ben from American Express. Two quick questions. One, I know that you touched upon it a little bit, but can you summarize a timeline where you think that the Jobs Act is going to roll out in a way that people can actually take action? And I will not hold you to it, because we obviously know that things can unfold in different ways. And two, what can large corporations do to help make this work?
I'll take a stab at the title.
Why don't we split it up?
Sure.
One.
You might get different opinions from a lot of people. I get asked that a lot, or is the timing? And our general answer to stay safe is, mine is mid-2013. By the time the SEC finishes up theirs, FINRA many of us are engaged with FINRA right now, and then we've got the states, some of the states issues. We've got some work to do ahead. So I would say mid-2013 is a safe way, and maybe, I don't know if this group would agree.
Vince, why don't you take the second part of that question?
Sure. Just so, I do agree with that, and it could be even longer. When you get into the issues of investment advice, that is the trending or picking or selecting on a site, things that wasn't intended in the legislation to be part of this, because we're now in the regulatory world, it's being viewed differently. So is that investment advice? How do we do that and not lose the power and the wisdom of the crowd intelligence? So those are real challenges, and why the SEC and FINRA, I think, is struggling with this.
And if I could add some real fast on that before you get to the second part. One thing that I try to dispel about that is this, but there's crowdfunding going on now. And as entrepreneurs, I encourage people to get out there now and look at what's going on. Get on Indiegogo, find opportunities. There's ways you can get your feet wet now. Don't wait till then. There's a lot of work being done to get to that point, but now you can be getting out there and getting engaged in it and trying it.
Can I just comment on that real quick? I love that suggestion. I mean, many of you in this room had a puppy before you had a baby, and the only distinction right now is this issuance of securities issue. Crowdfunding, as your panelists have been around since 06, 08. I mean, if an entrepreneur is interested in this vehicle, test the waters. See if there's a non-securities issuance avenue available to you, and use all the great tools that these guys have built to try and raise some capital, and then stand by for the issues of Securities Act 2, which I think you're right, could be mid to late next year.
Great.
Just really fast on the corporations. I think crowdfunding is, if you go back to social media, in about 2003, you have like MySpace. And in 2003 on MySpace, you pretty much only had like bands on it and some college kids, and anybody who's worth their salt wouldn't be on it, and any brand would never be on it, right? So at that time, any corporation talked about their Marcom strategy, which was this huge continent, and then there was this tiny little island called social networking, right? Fast forward 10 years, and pretty much now many of your Marcom strategies are actually run by social media and that whole concept. To me, that's exactly where we are in crowdfunding. You're in about 2003 of social media. I think you'll see the late half of 2013 and all of 2014 to be the year of corporate crowdfunding. And I think literally by the end of this decade, it will be layered into the fabric of funding the way people talk about social networking. They don't use it anymore, right? It's just communication, right? So funding and crowdfunding will be synonymous.
If I could add something on the corporations, what we're seeing, like recently the deal with Circle Up, I don't know how much when we have time to get into it, but with General Mills, and we're already starting to see some large corporations starting to really pay attention to what's going on, mainly in the Reg D space of crowdfunding. But I come out of, like I say, the film world, and right now we're working with several studios where they can come on and even in the reward base, back some filmmakers, but starting to see it in more of a macro level of how to move more macro level money too into the space. And so I think we're going to start seeing a lot more of that.
And lastly, to answer your direct question, as large companies, many of you are committed to partnerships and supply chains with small companies. I mean, hopefully everyone in the room knows about the open network and other things. If you're here on behalf of a large company, be committed to this education piece that we're talking about. You know, help the association and others get the word out on the do's and don'ts and the rules that are coming and what can be done today versus what could be done tomorrow. You know, so many of the small business and entrepreneurs do business one way or the other with large companies, so be a part of that educational push.
Do we have more time for questions? Oh, great.
Hi, I'm Ami Kassar from Multifunding. My question for you is when it comes to the small business owners, like the car repair shop or the bakery shop or the little wholesaler who, first, congratulations on the great work you're doing. My concern and my worry is that so many of these folks have a hard time even understanding right now, keeping up in their books, so the difference between their balance sheet and their income statement, I think there's going to be a huge hurdle to figure out how to get them to benefit from crowdfunding and the requirements and the financial requirements and the reporting requirements. Is anyone doing work, put aside the venture cap-backed type companies that might have a little easier time with the accounting, but to make this open to Main Street entrepreneurs so that there isn't this dramatic chasm between, you know, getting them on the platforms?
We're seeing it from the association. We've got several members. I know I've talked to several people, and Sage is out here, and some other people, I know you're competitors of them, who do micro accounting, and there's a lot of movement towards filling those and serving those industries. I think there's a tremendous opportunity to be an entrepreneur to the crowdfunding space. Bringing and helping those people, you know, that are suddenly going to be in this space and suddenly have questions about how do I deal with all, 500 shareholders? How do I deal with, do I want to get into this? How am I going to, what are my reporting responsibilities? One of the things I'll tell you from the association's point of view is we'll be launching next year a CCA, a Certified Crowdfund Advisor, sort of like a Certified Financial Planner, helping people at the local level learn, and they can do it at the local level. I think that's, to me, that's where the answer is having somebody at the local levels, attorneys, CPAs, your insurance guy, whatever, who knows somebody who's a certified specialist in crowdfunding to really help those businesses.
Sorry, man.
I was going to say, I also think that for smaller businesses, you're not going to see tons and tons of people that the business has never had an interaction with. I think the bakery is going to have 11 investors, and it's all going to be done through a crowdfunding platform. If any of you have ever done what we call a party round, lots of investors into a relatively small round, you'll know it's an absolute nightmare. Trying to get all those commitments rounded up at the same time, trying to get all the docs signed, et cetera. Bring it onto a platform, even for a tiny raise, saves tons of headaches, and that's a lot of what we've been focused on. I'm sure there's going to be some small business somewhere that has 300 shareholders that they've never met before is going to have compliance issues. I just think it's a bit of a myth when people associate crowdfunding with large cap tables. That will happen, but it's not required to be a crowdfund. You can have a crowdfund with 5 investors.
But isn't it true that for the 11 investors that can have the same ownership as the financial reporting requirements as if they have 300 investors?
You're saying if they go through a registration through the crowdfunding platform? They will, and they can be onerous, or you already have companies right now that have 11 shareholders in a bakery and seem to get by okay.
But I think also what Slava and Will were pointing out about this issue of transparency and being able to track performance. I mean, nothing makes you want to look more fit than walking around with your kimono open all the time. And so if crowdfunding can force those small businesses that you're talking about into better accounting practices, better reporting practices, then it's a good thing, right? We've got more transparency and more best practices being adopted. Absolutely, and that's where education and efficiency comes in.
That's a business opportunity. We're here.
Right, exactly.
Yeah, that's a business opportunity. Yeah.
Sorry, Slava, I interrupted you.
No, really what you're raising is just opportunity, right? The reason Indiegogo exists and why we're doing fairly well is because we created the industry and templatized the process, which happened to work, right? Now we have 700 competitors. And if we're doing something wrong, somebody will go about and do it better. You know, so it's just that easy. It seems like a lot of people are interested, so somebody will make that money.
Sure. I mean, there's great organizations starting down at the base level to develop the business plans, the due diligence, funding roadmap, crowd check. So you're starting to see a lot of development of technologies around best practice and standardization for the space, and I think that's going to continue, and the marketplace is going to solve a lot of it.
How are we doing, Michael, on time?
Is it okay a little bit longer on questions? I see a million hands going up.
Yeah, we got it.
Okay, so I'm going to take some more questions, but let's go a little bit less deep on the questions so we can reach more topics.
Hi, I'm Keithan Rohandale. I'm the CEO of Eartop Technologies, the youngest Impact 100 honorees, actually. But having recently conducted a crowdfunding campaign on Kickstarter, actually, I have a question for you guys. And that's, there's been a lot of hot press lately on vaporware and ideas and concepts that aren't necessarily as feasible as they come off in videos people make. It's one thing to go up and say, hey, you know, I'm going to create some awesome technology and I'll get it to you in 6 months. Well, how does that person even, how do we as funders, because I'm very involved in that community, know that that concept has, there is any proof of concept. That person has lined up their manufacturer, their supply chain is set up, their distribution is set up. You don't know that when you're funding that. So what are the regulations that you guys would be imposing, or I know are developing, to help combat that, I guess you could say, vaporware and that steam?
Do you want to talk about vaporware first?
Yeah, I mean, it's really it's all about user experience. I mean, at the end of the day, you need to put the responsibility both on the campaign owner and the funders, right? As a business model, it can behoove you for profit to try to get in between there and to facilitate that further and be eBay and buy PayPal so you can provide insurance. You know, you provide that not because you really need to provide insurance. You provide that to make people think that you're more likely to have your brand support, your product more likely to get it, right? And then your brand gets higher and then you make more money. I'm just giving you like the business aspect of it, right? But in terms of the, it's really about education. Number one, if we did come out with equity crowdfunding, the first thing we would do, and I hope the whole industry would follow, is we would have a cartoon right before you funded, and it would be a guy with his pockets wide open, or a woman, and money just coming right out of it. And say, if you continue, you will 99.8% chance never see this money again. Oh, I'm totally serious. I mean, it would just be like the cigarette packs, you know, like you will die. It'll say you will go broke. But the thing is, you have to keep on doing it over and over and over, and we'll need American Express to come in and help and create those like gambling ads, like, do you give too much money to crowdfunding? Please know that you might go broke, right?
Touch on that. Yeah, I think that's a really important question, and I think it goes exactly to what Will was talking about earlier. It's not going to be a massive strangers or the elves mysteriously populating your little bucket with gold. If you view it as the friends and family round that you'd ordinarily be doing, you're not going to start to get scale on your campaign unless you have that immediate buy-in from your friends and family that are coming in electronically and being transparent. That's the beauty. This is transparent. It is not in the dark room somewhere. So unless you're getting that buy-in from your immediate community that are validating who you are and what largely the product is about, you're not going to scale to the next level. So in most cases, if it is vaporware for us, people are going to start to learn, well, they got 2% buy-in from strangers. That's not a good sign. So it speaks to largely the wisdom and the intelligence of the crowd that we're trying not to lose in the rulemaking phase as SEC and FINRA coming in.
In certain ways, like we're working with small I've just lost the term, but it's the Community Bank Association, I just lost their name. But we're working with small banks on how they can get in and do contingent loans. And so people can put that out there on their crowdfund raise. And it makes a big difference. Somebody saying, hey, somebody knows them. And it gets the banks back into the lending business at lower dollars that they otherwise couldn't make. So there's some interesting ways of generating consumer confidence or the crowd confidence on some of these deals. I don't want to go too far into this.
So you're 19, so you probably started day trading already. So you know how, right, exactly. So you know how you use like different alerts? So you're waiting for a trigger to come out and it goes green, it's like, oh, buy now. So you can do the same thing in crowdfunding. So it's really all about user experience. At the end of the day, it's all product. It's for somebody who codes ones and zeros to figure out, which is, you know, you can have, if you have a video, you can have a more likely algorithm to be, hey, this is not fraud. If you do an update every 5 days or less, you know, you can be tracked more easily. If you connect yourself through Facebook Connect and you show your identical profile, if you do a background check and we've approved you, all these things could go into an algorithm, which is when you're about to fund and you know your pockets are wide open, it's gonna say, what is the chances that this is fraud, right? And there's a difference between what is fraud and what is just poor delivery. And what you're talking about mostly is just poor delivery, which is for judgment. Since man was born, judgment.
Next question. Hi, Steve Mariotti from Nifty. Hi, Andrew. Andrew was my lawyer for 25 years. Great to see you. I have a question for you. What are the any unique issues involving minors in this? And I also want to say I thought the panel was excellent. I'm really excited about this. But are there some things for like a kid that's 13, 14, 15 in this dynamic that's different than well, I'll let you answer.
It's actually an interesting question, and I think the context of the question from Steve is, those of you that don't know NFTE, I mean entrepreneurship being taught in middle schools and inner cities and to disadvantaged youth, and so to what extent can a younger person access this? I don't frankly know on the non-equity side, Slava, is there any age limit on your side? For non-equity, I'll get to equity in a second.
For the financial transactions, you have to be 18, but what we're seeing a lot of is actually young people using their parents' identities and bank accounts, which is actually okay to do. And you know, for what it's worth, when I was here, this is more than 4 words, I'm sorry, but when I was here, we're partnered with Nifty, actually. When I was here a year ago, and when I spoke, my big idea or whatever actually is for young people education. See, in my opinion, you know, math and English and science and all these things are taught, and I think it's a shame that when you're in kindergarten, you're never taught the word entrepreneur as something that you want to be. I think it's a travesty, right? And I think that, no, seriously. And I think to solve that, I would have every child has to run 10 businesses in 10 years. And what I mean by that is really one campaign is a business, because you will learn everything. Starting in 7th grade, 7th, 8th, all of high school, all of college. 10 years, 10 businesses, you'll get out of college and you will crush it. Chances are between one of those 10 businesses, you'll find what you're passionate about and you are off to the races.
But Steve, I'm confident.
Look at the young kids shaking their heads. Right. 19 and 23 right there, whatever.
I'm confident when we get the regs from the issuance side that there would probably be at least, you know, the ability to issue securities, the ability to enter into contracts, that there will be some baseline. But I don't want to take away that boring part of the answer from Slava's incredibly powerful suggestion.
And Will, could you comment on the equity side of it?
As far as what?
For minors.
Oh, yeah, I mean, I think that's just kind of common sense. You're going to want people to be 18 or over, you know, to get into any kind of equity style arrangement. Yeah, I mean, that just seems pretty clear. But at the same time, you know, if parents are doing it in conjunction with their kids, like parents allow kids to do lots of other things where it warrants 18 or over, I think that makes a ton of sense. And I think, like Slava said, from an educational standpoint, I can't think of anything as greater education for my children.
I think they're going to do it anyway. It's kind of one of those things that's like he was talking about earlier. This is a wave you're not going to stop. And we have a Now Crowd program that we're working with youth, and love to visit with you about it. Specifically starting to target, you know, crowdfunding for young, you know, under 18.
Hi, I'm Tammy Halevi from AEO. Thank you for a terrific discussion. My question is for Slava and Will. Can you say more about, from the perspective of an entrepreneur, what differentiates a successful campaign from another, and what does an entrepreneur beyond, you described a video, does better? What's the secret sauce that makes some succeed?
Yeah, I mean, I mentioned some of these things really quick. For what it's worth, I give like literally hour-and-a-half lectures on this. I'm going to do it tonight at George Mason. But like I mentioned, there's 3 things that matter. I'm sorry, this is more than 4 words. Yeah. Number one, have a good pitch. Number two, be proactive. And number three, find an audience that cares. It does not matter what your campaign's about. You're probably going to want to come up to me and say, hey, this is what my campaign is. What do you think? It's irrelevant. Those are the three things that matter, which is having a good pitch is having a video. You'll raise 114% more money than if you don't have a video. Average campaign will hit its target on day 36 of a 47-day long campaign. Campaigns that hit their targets, on average, 93% of them will have perks. 85% of them will have 3 to 8 perks. Usually want to have a high, medium, and low. So that's for have a good pitch. Number two, you want to be proactive. Have an update every 5 days or less. You'll raise 4 times more money than if you do an update every 20 days or more. Hands down, email is your number one tool. Facebook is number 2. Twitter is number 3. If you start off to a fast start and you hit 25% of your target within the first week, you're 5 times more likely to hit your target. Then the last thing, I'm going really fast here, so leaving out a lot of stuff. This is all on our blog. The last thing is finding an audience that cares. You always need to hit about 20 to 40% of your funding to be able to finally get those strangers, those elves, to come find you. You'll never get elves when you're at 0 or 5 or 7 or 11% funded. You need about 20 to 40%. And then you want to get out to the strangers. So on average on Indiegogo, 20% of your funding will come from complete strangers. Some campaigns will never get $1 from a stranger, and some campaigns will get 98% from total strangers. So how do you get 98% if 20 or 40% had to be from your inner circle? Well, because you get so many strangers, that 20-40 keeps on getting smaller, right? So the way you get there is through the GoGo factor, which is an algorithm that tracks 47 different criteria and will see how good your campaign is, and then you get out there.
Yeah, what it's not is putting it on there and just seeing what happens, and that's unfortunate, as Slava said earlier. That's kind of the myth that people have. When we sit down with people and we talk about their crowdfunding campaign, we're really in many cases talking about what their marketing campaign is. And not a lot of folks really know how to market online. Not a lot of people understand how to get out to the press effectively, how to communicate to their audience effectively. You'd be shocked at how many people, it doesn't even occur to them to ask their close friends or even put in a pledge themselves to get them going. They're like, I'm at $0. So, well, have you asked anybody in your house to pledge? No. Okay, well, you know, the folks that do well ask absolutely everyone.
One last really, really important point. Imagine for a minute the internet didn't exist, and you were just asking Slava, what 3 best practices would you advise an entrepreneur looking for capital? It would probably be the exact same 3, right? Have a great pitch, understand your audience, and be proactive. I mean, let's not mix, right, the essence of capital formation with the fact that we are blessed in a society with the advancements of the internet, and we now need to let the law catch up with those advancements. I mean, those are timeless pieces of advice, and then all the subcategories under them are crowdfunding specific.
The Statue of Liberty was crowdfunded. Do you guys know that? No, really, the actual base was funded by Joseph Pulitzer using the paper.
Hi, I'm Susie Sosa. I run the Dell Social Innovation Challenge out of UT Austin. We have 25,000 students from over 100 countries that post entrepreneurship projects in our challenge. And as I travel the world and talk to these students who are in university, many of them are at a tipping point, trying to decide whether or not to pursue this innovation or to take a job offer that they might be getting somewhere else. And when I ask them, you know, what's the factor that is making you choose between those 2 paths, funding, seed funding, startup funding is usually the thing they cite. It may just be, you know, a few $1,000s to choose between a paid summer internship and the opportunity to do a proof of concept. So the question I'd like to pose to you is, how can we leverage crowdfunding to spur more students, to give more students access to capital and spur them to choose the path of entrepreneurship for their ventures?
We focus on this all the time. It's that first $10,000 or $20,000. I mean, ultimately, every business needs the first $10,000 or $20,000. And while a lot of the focus on crowdfunding has been around enormous raises of $500,000 or $1 million and beyond, it's really $10,000 or $20,000 in the hands of millions of people that's going to move the meter. Because some of those will go on to use their own capital, customer capital, et cetera. Some will raise outside capital. But we think that if we can move the meter at scale at the early levels, when people are making exactly that decision, that's probably the most important part of all of this.
It's a vetting thing, too. It starts sort of an approval. I mean, that's what I was talking about earlier about the layering process of using reward-based or donation-based before you move into a hire. And getting out there and getting that seed capital, but you know, I personally think it's, I hope we continue to do, even after equity's begun, we're still using reward-based donation to help vet those projects and as a method of getting those smaller dollars before you move into the bigger.
We'll move to Andrew, and seeing it's the last question, maybe I'll have each panelist sort of go
Wearing
through.
my professor hat, to answer your question, it's an awareness issue. Everyone in this room, including you, Steve, who teaches entrepreneurs at any level, has to update the syllabus, update the curriculum, get the word out so that these young students know that this vehicle even exists, you know, and what are the mechanics of that vehicle, and pointing them to the best practices. I mean, I've completely rewritten my syllabus this semester on entrepreneurial finance around what's going on today. And so if you're teaching, you know, in the classroom to students, you've got to make sure your syllabus and curriculum are amended and updated.
More appetite for this, because right now I feel like you're being very passive and saying, we have this awesome tool, good luck using it, here are some tips, but can we be more proactive and build interest and demand on the funder side to create appetite for
You're
this?
from UT, you said? Yeah. What's the alumni base of UT?
Well, my students are.
How big is the alumni of University of Texas?
50,000.
Like, it's probably 6 digits, right? So right there, you have a vetted interest of people wanting to fund their own people. You should be partnering with crowdfunding. You should be incorporating it into your process. I mean, I'm going to speak to George Mason tonight because that's what they want to do. You guys should like catch up.
Vince, really? Great.
You know, I think this is the very
final
core.
words from Vince, yeah.
I'm sorry, it goes to awareness. This is the new paradigm. This is about the old buy side and sell side being matched and coming together. So we're looking to use technology to create awareness and talking to folks like Jennifer Kushnell at YSN. Great youth movement on that side. Corporations like American Express propagating this new ecosystem with information and knowledge and be able to interact so that it becomes more robust and much earlier in the cycle.
One thing we're doing, I think we're about to close it, but for example, getting, I think you're right, the crowd. It's crowdfunding. We need to get the crowd aware of what crowdfunding even is. And one of our programs that I'm really excited about is the Veterans Program, where we're going to have veterans out there looking for funding, working with portals. But then the challenge is to all Americans to come online and find at least one vet project and back it. And in that process, a lot of Americans are going to learn what crowdfunding is. And so there's things like that I think we can do that really help raise the crowd's awareness.
The thing that we've found is that most of these raises happen where entrepreneurs reach out to other founders and entrepreneurs. So most of the new businesses that we have come onto the platform were referrals from other people that have already raised in the platform. And I think a lot of that's happening very quickly. Every entrepreneur, the moment he sees his buddy raise $20,000 in a couple days, says, that's what I should be doing.
Okay, great. I'd like to thank all the panelists and those people that had some great questions.